partner to bring you some ideas about these topics. As you know, the core banking system is the most important system in the banking, which handling the core transaction and the accounting informations for the bank. So for a long time, the core banking system has not changed at all because of the stability requirement from the banks. But coming into the new digital era and internet era, with the dynamic trends for the market and the user behavior also changed significantly. So most of the banks has raised their strategy for mobile first, which will bring the digital and mobile to their end user on the front end, and also provide the services, for example, the legacy services, which put into the mobile intelligent phone, also put a lot of innovation services into this platform. For example, the robo advisor, the digital lending, and the super wallet, and so on. So this kind of transaction increase a lot of information and increase a massive data to the system. So how to dealing with this kind of transaction and data will require the core banking system has the core capability to handle this high frequency trading, and also to have the capability to open the architecture to interact with the ecosystem. But for the conventional core banking system, because of the stability requirement, and it have lots of legacy technology in the full stack. For example, we usually call this is the IOE full stack system. IOE stands for IBM, Oracle, and EMC. So it doesn't mean that most of the system has built by these three vendors installation, but it means that all of these system has been built for a long time with this closed architecture and technology for a long time. And with the technology of these legacy systems, the customer has very limited capability to increase the capacity of the system, also to explanation of the performance of the system. But most important is that the business time to market is quite slow, and the cost is also very high. So this is the challenge for the digital transformation, for how to transform the core banking system to adapt the new requirement of the digital era. From our idea, we will try to bring a new solution for this market to help our customer to new build the core banking system or to reconstruct the conventional core banking systems. From our perspective, this new digital core banking system will contain with three layers. The first layer is the open banking services layer, which require the bank have the open business capability to interact with the ecosystems. And the business should be fast time to market, and also it's very easy to customization because the system need to connect with the ecosystem, to the peers, to the regulators, and so on. So this system need to be simple to integrate, open for customization, and rapid to time to market. On the other end is the architectures. As I say, the legacy architecture and technology has limited the performance and the scalable of the system. So keep this in mind. The architecture transformation is very important. How to move the open architecture and distributed architecture is very key. For example, how to move the closed technology to the open technology, how to move the centralized architecture to the distributed architecture to keep the system can be scaled out very easy, to keep the system stable as before, to keep the performance can be increased as large as you can, and also to bring the new technology like open source technology to use the idea from enterprise architecture, for example, the event mesh technology and so on in your system. And last but not least is the second tier, the middle tier of this system is we so-called the Agile operation layer. This is very important because when you put in such kind of complexity technology and system into one box, you need to have the visibility and unified management to manage all your system from top of the application to the bottom resource layer, to have an overview to manage this system, to control this system, and to have your operation more agile. On the other hand is the data governance. For example, the data increased from day to day, and the volumes of the data has increased as well. So how to do the data governance? How to make the data more intelligent to support your business innovations and to comply with the regulations. This is also very important. So the second tier is also the very important consideration in this digital banking framework. So keep this in mind. We bring the new architecture of the new digital core, which based on our hardware, ICE tier, and cutting edge of the financial PaaS layer, and on top of the 3 tiers, we have the banking as a services capability, which bring from our ISV partners. When talking about this, a new digital bank, for your reference, which is a very successful case, an install base in China. In this case, an architecture you see, they purely build their system on the open source technology they call SML. S stands for x86, M stands for MySQL, L stands for Linux. And their software development strict followed by microservices framework and also by DevOps procedures. So when you look at the whole architecture, it's purely distributed. Distributed database, distributed storage, internetworking for data center can be kept active and multiple active standpoints. So at the end of the day, the technology capability for this architecture is quite amazing. For example, they are running the bank for more than 5 years, and the scalability is nearby 5.9, and also the capability for the capacity for the bank, you can see in the figures, the account number is a large volume. The peak transaction for days is also a very, very large volume, as well as the systems for server, for application systems. And on the other way is the business continuity. The RTO is nearby 0, the RPO is equal to 0. So based on this cutting-edge architecture and systems, they also have a very good and outstanding business performance. For example, the bank ROE, the NPL for the bank, the IT cost per accounts for the bank compared to their peers is quite amazing. So based on this best practice, we have our joint solution with our ecosystem partners. By now, we already close engaged with more than 10 or leading ISVs in this industry. And from the joint solution point of view, we have an end-to-end framework and solutions for the new digital core banking systems, which including 3 tiers. The first tier is provided by our ecosystem partners, which is banking as a services, who can provide the product factory with modular design and microservices and open APIs. And on the bottom is what Huawei can provide. It's a very scalable IaaS tier based on our infrastructures. And the most important, this infrastructure is very cost effective, and the provisioning is very simple. And between these 2 tiers is the distributed path, which is very important to the whole system. In this tier, the distributed path is based on the microservices modulars and also based on the agile operation and development. So within this whole framework, Huawei provide the IaaS, even on some case we provide the PaaS, and our ecosystem partners provide the BaaS tier, and also in some case provide the PaaS tiers. So as we can see, nowadays in global view, more and more banks are trying to build the new digital core system, or they are reconstructing their conventional core systems. Here I will bring 2 very interesting cases for your reference, which happened recently from Huawei and our ecosystem partners to help the bank to build the new digital core. The first one is coming from Thailand. One of the top banks in Thailand used Huawei and Fong Sing Chung's joint solution we call FinQ, which based on Huawei cutting-edge IaaS tier, including on-premise cloud and on-public cloud with this mixed model to support the PaaS layer provided by phones and also the modularized application provided by phones. So in this case, you can see the customer will build a new digital systems. On top of the system is the super wallet. This is the first stage. And from the going forward, the next step is the bank will, based on this new digital core, to build a new digital platform to connect with 5 ecosystem industry, which including educations, healthcare, transportations, payment, and governments. And going forward, for the last stage, is to build this platform as an open platform plus cloud services to provide the services to the ecosystem and to the peers. Another case is from Indonesia, which we cooperate with Sunline to join solutions to provide a unified payment system based on the traditional core systems. And for these solutions and projects, we also provide the IaaS and PaaS. And Sunline provide the upper layer of applications. So the first step is to revise the EDS, ODS, ESB, plus unified payment system. And going forward for the step 2, this new digital platform will open their API to connect with third-party payment systems, to connect with the multiple consumers channels, to include the multiple channels from the old system with the new systems. When talking about this, keep the win-win strategy in mind. We always cooperate close with our ecosystem partners to help our customers to accelerate the new digital core banking construction and building. So I will stop here for a while, and let me introduce some of our very important partners to share with you their ideas on the new digital core banking solutions and their insight for this market. First, I will introduce Matthew Chen from Sunline, who is the Group CEO of Sunline International Business. Matthew has a rich experience in this market. He joined Sunline in 2015, and he led the overseas business for Sunline to cover the Asia Pacific area. Let's welcome Matthew Chen.
Hi everyone, my name is Matthew Chen. I'm the Group CEO for Sunline International. Today I'm going to talk about how technologies can help conventional banks to thrive digitally through contactless banking. You know, if anyone says that the 2003 SARS actually made e-commerce and even Jack Ma, the current COVID-19 pandemic really made the people's behavior change globally. So people are forced to go online and go digital, in which inevitably this will fast track the global digitalization exponentially. Let's look at some stats. The graph that I'm showing you here actually shows the percentage of usage of bank apps versus any other third-party payment apps for purchase. So it clearly shows that the amount of time that people actually spend on a third-party application app through payments is way far more than people actually using the bank's app to do purchase and transfer. So what does that tell you? You know, maybe let's also look at some of the stats that the during the current COVID-19 pandemic situation. Everyone, obviously, we're using Zoom now, right? So the daily active users on Zoom has reached over 300 million during the pandemic situation, and globally there are more than 2 billion number of downloads for things like TikTok, right? And everyone obviously knows that there's a super app in China, it's called WeChat, and which over 1 billion users, right? So the amount of time that people actually spend on WeChat comparing to the amount of times that people actually spend on a banking app, that if you look at the top 2 banks app in China putting together, is actually less than 15% of which, one of the super app like WeChat. So anyway, if you can do a little test of look at your smartphone, and if you rank by the airtime, the screen time of all the applications on your smartphone, you will find that usually your banking app is just a little dot in the end, right? So banks, you can forget about trying to turn your banking app into a super app. It's proven not successful in China already. A lot of banks spend millions, tons of dollars on the investment into the mobile banking app, trying to make that into a super app. It turned out to be a failure. On the other end of the spectrum, if you also look at a lot of so-called unbanked or underbanked people, they also struggle to access to the banking product and services, and also at least to find the right product and service that suit their needs. So the key is actually connections, right? So how we're going to connect in the so-called digital banking world? How are we going to connect with all the banking product and services with all these underbanked people, with all these underbanked and unbanked people? So the bank really need to weave their product services into people's daily life, into their 360 degree of daily life, because they are everywhere, right? Like I mentioned, they might be on Zoom, they might be on TikTok, on the WeChat, they're on Facebook. But they are just not on your banking app. So how are we going to make the connections? So the diagram here shows there's 3 very important layers, right? So the open API layer, which sometimes I refer to as an open, a front office layer, right? And also there's a middle layer, the business layer, and also as the heart engine is the technical layer. So these 3 layers, sometimes refer to them as the front, middle, and back office layers, are the key 3 layers to help make the connections. Let's look at that, right? So the front layer, again, sometimes I call it a partner ecosystem layers. So the key stats are showing in the previous diagram, proves that these days, instead of actually turning your banking app into a super app, you really need to work with all your partners' apps, right? You actually need to bank through your partners' ecosystem, and banking and onboarding customers through your partners' applications. So the front office layer, which is the partner ecosystem layer, that can include like travel, accommodation, shopping, education, social media, medical, lifestyle, you name it, right? Anything that people's daily touch point, which actually a normal person will leave that digital footprint 360 degrees. Somehow the bank need to weave their product and services into people's 360-degree ecosystem. So that's the front office layer. And the middle office layer is actually the business layer. So sometimes I refer to that as actually the brain. So actually the decision-making brain is actually the key. In the modern world, the decision-making is actually real time. So it's T+0, it's no longer T+1. So all the big data-driven precision marketing and the big data-driven risk management has to happen real time at onboard stage. So work very, very closely with the front office layer, right? So these frames, in a typical conventional banking system, this decision-making platform, this analytical platform used to be T+1. So it happened, at the end of day batch and happen the next day. It's too late. It's no longer relevant, right? So it has to happen real time, T+0, weave very, very closely with the front office ecosystem layer. So in Sunline, we call it, BDAP, so big data analytical platform, which is actually the key for this business platform layer. Of course, then in the heart of this is actually the back office, which is the engine room. I call it a technical platform layer, which obviously you need a very flexible, agile, distributed microservice architect to support the front and the middle layer. Right, so they are the three key layers that actually help the bank to weave their product services into all of these unbanked people's 360-degree touch point in their daily life. So I want to share a little case study with you that we actually did together with Huawei in Philippines. A lot of people obviously knows WeBank in China, right? So a lot of people say, WeBank may be unique. It's very difficult to repeat the WeBank success story because WeBank is, live and breathe into the 1 billion WeChat users, but you don't have another, WeChat, a super app outside of China. So is that success story can be repeated or not, right? So we actually proven yes, can be done. So this digital bank in Philippines is no branches, right? So they just have one HQ with 2 ATM machines downstairs, no branches. But we help them to connect with 8,000, 7-Elevens all around Philippines. So which means that any people that want to deposit cash in can go through this 8,000 7-Eleven as an agent bank. And also we hook them up, using Visa Plus with 20,000 over ATM machines nationwide. So basically utilize other banks' ATM machines nationwide. So any of these 20,000 ATM machines, people can withdraw money, can cash out for free, right? So the bank claims that they can do eKYC in 10 minutes. The bank account can be opened within 10 minutes. So therefore, the number really is right. I mean, you look at the stats here, within 6 months, this brand new digital bank reached 500,000 customers already. And right now it's over 2 million customers already, within 15 months, right? So from a brand new bank. And then, other than the 7-Eleven, we help them to do the cashing and the Visa 20,000 ATM network using Visa network for the cash out. We also hook them up with one of the largest e-wallet in Philippines. So the bank actually weave their product and services, the smart saving products as well as the loan product into the e-money wallet in Philippines, which has a lot of active users in Philippines. Right? So this is a classic example how we can make that connections, how we can help the bank, from ground zero up to reach quite a handsome number of new customers within a short space of time. Then you might ask, how are we going to do that, right? How are we going to do that? So for any traditional bank, it's almost like launching a brand new digital challenging bank in your conventional bank, right? So it's almost like just now the WeBank story or the Philippines story, you're going to create a story within your own bank. So launching an internal digital bank. So how are you going to do that? Typically, there are 4 different transformation passes, right? So if you're happy with your existing core banking system, of course, you can do a bit of patch. So basically, all you need to do is just build a front layer, the ecosystem digital channel layer, just wrap that around your existing core. So maybe that's enough if you're happy with your existing core. Or if you're not happy with your existing core, but you're happy with your existing vendor, you can obviously choose an upgrade path as well. But a lot of customers that we have dealt with in China and also in Southeast Asia, that they're either not happy with their current core banking system, too old, not agile enough, or they're not happy with the current vendor. So what do? Should you go down to the replacement mode? But that's too risky and too costly, right? A big bang replacement mode. So Sunline, we actually coined the terminology. We call it a parallel dual core approach. So let me take you into a bit of details of what do we mean a parallel path. So it's almost like a phase. I call it a 3-phase replacement mode. So at the end of the day, in phase number 3, it will help you to replace, but the big bang actually happened in the end. So what is phase 1? Phase 1 is almost launching an internal digital bank, like the example I gave you in Philippine case, right? A brand new digital bank, starting from a clean slate. So we launch a brand new digital core, which is the green one on the left-hand side, and work hand in hand with your existing core, which is the white one on the right-hand side. Obviously, we need to collaborate with your existing core in terms of general ledger, in terms of customer information, CRF, and also regulatory reporting, as well as the data. But this first phase will give you a very nice clean slate to launch a brand new digital bank internally within your bank. And phase 2, because we already have a data lake which we build, right? So slowly we can migrate all your existing retail and SME customers to the new digital core, just by migrating themselves. So all they need to do is, any existing customer in your old core, they open up a digital account in the digital core, and they can move accounts by themselves by simply closing the old core and move themselves to the new core. So we call it very gradual, very smooth online to offline a migration path. And phase number 3, which is the last phase, is actually the big bang, because what you need to do for the big bang is only corporate banking, which actually usually large in value, very small in quantity. So you leave the risky part, big bang replacement mode, to the end. So what we call a 3-phase replacement mode. That's how we're going to do it, right? So the solutions that we jointly work with Huawei, without going too much technical details, we have done all the competitive testing with Huawei. So our digital core banking software work hand in hand with Huawei's hardware. Like in a layman's terms, almost like these diagrams, right? So, the front and middle layer, the front open API, the digital channel layer, as well as the middle and back office, the digital core layer, work very nicely with Huawei's infra. And Huawei's infra doesn't matter on-premise or in the cloud, as almost like a appliance kind of concept. So we can pre-configure and pre-install a lot of activities, can be all pre-done. So just to give you an example, recently we actually helped a bank in Indonesia, a traditional bank, to launch their digital banking during this COVID-19 situation, right? So through a remote implementation mode. So everything is contactless. So that's how we do it. So to wrap it up, in summary, I think there's a key value proposition that both Huawei and Sunline, our joint solution, can bring to the table. We are definitely fast in terms of the time to market. We're very open in terms of collaboration with the ecosystem. We are very low cost in terms of total cost of ownership. And obviously we are scalable to support. We can support up to 10,000 TPS per second with our digital core, right? So with that in mind, that will be the end of my presentation. And thank you very much for your attention.
The second guest I will introduce is Martin Frick, who is the Managing Director for AsiaPac for Temenos. We know Temenos is a world-leading financial services solution provider. Matthew has a rich experience in this sector for many, many years. Prior to join Temenos, he has a rich experience working for another leading ISV, Avalon. And also he has a long history to work as a senior executive for the bank, Raiffeisen in Switzerland, and UBS. Let's welcome Martin Frick.
So a very good day to everybody. My name is Martin Frick. I'm the Managing Director of Temenos APAC. I want to talk about the transformation of banking that we see happening today, what this means for your operating model, what this means for your technology. That is going to be our topic of today. If you think about an enterprise of any business line, a conceptual view of any enterprise more or less looks the same. You have an office where people administer and work for the enterprise. You will have a factory where things get produced, where the products are manufactured. This can be an external factory, can be your own factory. You will have a shop where you distribute your products, and essentially you have something called distribution, which moves the products that you have manufactured from the factory to the shop to be distributed. So that's essentially the high-level conceptual view of any enterprise that exists and does business on the globe. Now, when you look at this particular value chain in banking, what you see here is what has been the value chain for the last 30 years. Essentially, if you start on the left, you have the whole distribution side. You have the channels where you are in contact with your consumers, and you take orders as a bank and you manage the holdings of your clients. And if your clients do business with you, it goes back to the manufacturing, where you then settle the products, you do the clearing of the products, and you do the offering of the products. Now, with open banking, and especially PSD2, this value chain is going to be split, because PSD2, which is the Open Payments Initiative in Europe, allows now third parties to take over the distribution and front office part. So other parties than banks are allowed to take orders to manage holdings. And this means really a very, very big change for the whole end-to-end value banking chain. Now, if you think about it, this has happened before in the industry. Because back in the 1990s, a book was published by the author you see on the right-hand side, and it is called After the Trade is Made. And it's called about the concepts of real-time settlement, real-time clearing of capital market products. And this led to a complete change of the industry, because the industry went into straight-through processing. And this also split then between the sell side and the buy side of the market. So it completely changed the way capital markets were working, because on the sell side, a consolidation was happening. You only have a few investment banks left on a global scale that offer investment products, and the buy side got completely diluted, and it got also new players emerged, like the BlackRocks of the world, that give you a much better distribution network than the typical traditional banks had. So complete change of the value chain, just driven by the segregation, separation between the office, the distribution side, your shop, and the factory. Now, banking today is very monolithic. Essentially, the shop is in the factory. And a good example to elaborate on that is credit and debit cards. When you think about it, almost every bank issues a debit and a credit card. And the only reason why they're doing that is because the shop is hardwired to the factory. So if you take the example of UK, there is a credit card provider called TSYS, which is the credit factory, who issues the cards, who does the processing of the cards. And all credit cards are hardwired to this factory. And that's the reason why you still have a separate card for credit and debit card, because the debit card is typically wired to your on-premise factory within the bank. But there is no single technical reason that you cannot have both in one, because since the chip that you see on this little card was introduced at the beginning of the 2000s or end of the 90s, it's technically possible to have each card playing a credit and a debit function. So there's no other reason for having two cards except the hardwiring. Now, open banking restructures the industry, as we mentioned, and what's happening now is that it kind of decouples the shop from the factory side. So what does this mean in banking terms for us? It means that the distribution from different factories can happen to different shops. And the first thing that's happened, and what we already see happening in the market, is a disintermediation of these distribution channels. So it's not only the bank branch or the bank online banking that now distributes banking products that are manufactured in the factory. It's foreign players like Amazon, Rakuten, Alipay, Tencent of the world that took over a lot of the distribution side of banking. Now, the second step will be that it leads to a consolidation on the factory side, similar to what we have seen in the capital markets, because if you have different distributors than only yourself, then obviously these distributors can choose from the products with the best conditions. So this means only a few banks will be able to provide very interesting payment services or very interesting accounting services on a global scale at an interesting margin. And so we will see this consolidation on the factory side happen as well. Now, the main investments will go into the shop because everybody wants to stay relevant on the distribution side, wants to have the client relationship to drive his products to the market. So what you already see happening today and what will happen even more is that money moves to the distribution side. Because what open banking creates is nothing else than one race for the client, which has already started with these foreign players coming into the banking space, and another race for scale. So you have all these efficiencies you need to offer very good priced products to the market. Now, what does this mean now for your enterprise? You need different pieces of software in your enterprise to address this intermediated value chain. In the office, you have typical what you need for the office to manage your enterprise. You need finance, risk, HR. You need to manage your assets. You will have a marketing function. So that's the software you need to run the enterprise and to coordinate all the things that are happening in factory, distribution, and shop. If you think about the factory, you need things like clearing and settlement, obviously. You need to have an efficient way to create new product. You need to have good ways to streamline your order flow and your order execution. You need to be concerned around financial crime mitigation, limit management, fund authorization. So everything flows seamlessly in a straight-through processing approach for your factory. So that's the kind of software product you most likely will need to run a very efficient factory. Now, on the shop side, it's everything around your partners. And I explicitly take this term because your partners can be manifold. It can be prospects, clients, employees, suppliers, regulators. Anybody who interacts with your distribution side needs to be served through your software pieces you have there. And so you manage the users, you manage the identity of the parties interacting with you. And in the optimal case, you create intelligent agents. So a partner or an employee interacts in a different way with you than a prospect or a customer would do. And this is the pieces of software that you need to build up a very efficient distribution side. And the distribution itself is essentially managing the orders that come from the shop, the holdings that are generated by the orders, the origination of orders, and you need to know your customer. You want to run targeted marketing campaigns against your clients in the shop. You need to understand the full portfolio of your clients in the shop. So this is software that enriches your distribution side and gives you a full holistic view on whoever does business with your shop. Now, we as Temenos, we provide the software for the shop and the distribution. We call it Infinity, and we provide the software for the factory, which we call Transact. Now, for a bank, this means it's more than just a core banking transformation. That's not the topic, but you need to think about how you operate in this new world. You need to think, am I organized the right way? Am I too much organized along product lines? So I have a credit function, I have an accounting function, or do I need to organize myself differently? You need to think about new competition that is not coming from your primary competitor so far, the other banks. It's coming from other players like the Amazons, Alipays, Tencents of the world. You need to think about your business model. Do I want to play on the distribution side, on the shop side, or do I want to play on the factory side? And you need to think, do I have the right technology in place to handle these different aspects that we've seen on the slide before? So it's more than just transforming your core. It's really transforming your operating model to be ready and cope and be a successful player, a dominant player in this new paradigm. Now, when you look at the Temenos architecture of software, we have architected our software exactly along that value chain. So we distinguish between channels, distribution, and manufacturing. On the channel side, we have Infinity applications. So these are apps that can interact with any of your partners, that manage user agents, that manage access to your shop. So this is what's happening on the Infinity, on the channel application side. On the distribution and on the manufacturing side, we have microservices that serve a certain purpose. So for example, we said origination of products is in the distribution side. So you expect to find a loan origination service in an Infinity microservice world. And that's exactly what we built in this side. And on the other side, you then expect this loan to be operated, settled, and managed in the factory. And this would then be a corresponding transact service. Now, obviously, these different services interact through interfaces to the factory or through user experience-based APIs to your channels. And they're completely independent of each other. So you can run an Infinity service without having Transact, and you can run a Transact service without having Infinity, because the whole thing also needs to serve third parties. So you want to use your loan origination services also in a third-party application. So for example, on a WeChat platform, you can initiate the loan and it goes back to your factory. And the same applies to the factory side and to the channel side. So everything is independent of each other and runs on distinguished services. Obviously, we can support this new operating model that we are in the transition of to. Now, an optimal transformed bank looks a little bit like this. You will still have your regional or niche distribution services. So as a bank, you operate in a certain market. This market can be very limited to one country. This market can be a global niche around specific wealth products, for argument's sake, but you will still have very regional own niche distribution services. And on top of that, you will scale your digitization to interact through apps, through other channels with all the interested parties in your organization. So it has a very much of a scaling effect on the digitization side. And this also means you will not be able to maintain different technologies, different apps for all these interested parties. You need to find a way to handle everything on one platform. You also want to be able to distribute to third parties, and the manufacturing will go more into global roles and very scaled, because here the efficiencies of scale come into play. It's quite obvious that somebody transacting millions of payments a day can be much more efficient, cheaper, and more secure than somebody processing only a few hundred payments a day. And this is why there definitely will be a consolidation effect on the manufacturing side. So manufacturing will go for scale. So you need to have a robust system, a reliable system, a system that can handle your volumes going forward. Now, the key is then that you can act as a distribution platform of platforms. What does this really mean? You take your own legacy products that are manufactured in your factory, you take products from other factories and you distribute them either yourself through your shops, you distribute them to third-party shops, or even more interesting, through non-banking platforms. And this is something that is happening in China, for example, because more and more banking services are available on non-banking platforms like WeChat or Alibaba. And this is where you have to position yourself as a bank in which of these areas you want to play. Is it going to be a distributor, so a very excellent job? Is it going to be a scaled and global manufacturing service, which is all about scale? Or is it going to be a platform as a platform, so an intermediator between all these different parties in the market? And there is a decision to be made, because there's only very, very few players on the world will be able to have all these competencies within one enterprise. Now, Gartner says that 80% of financial institutions will be gone by 2030. I think the importance is not so much, is it 2030, is it 2040, or is it maybe even 2023? But we have seen in the recent COVID crisis that this digitization and this splintering up of the banking value chain is happening in real. And so I think there is a very high chance that this prediction becomes valid. We obviously say that the 20% left will run Temenos. Now, Temenos and Huawei, in their partnership, we are very, very complementary in that game. We provide the software, as explained, the Infinity software for distribution and the shop, the Transact software for the factory, surrounded by latest technologies like AI, robotics, and data analytics. And Huawei has a very robust and very progressed infrastructure stack where you can then choose the best deployment model for you. Whether your deployment is going to be in the cloud, whether it's a hybrid deployment, whether you want to deploy on premise, Huawei is a very good choice to handle all of that. And obviously, we also have real-life examples about that, because the partnership between Huawei and Temenos had become very beneficial for two banks in Cambodia to really build their core banking system, their factory, from scratch. With this open architecture on the infrastructure side of Huawei and the Temenos factory element, Transact, we could very, very quickly roll it out into those markets. And so we are very convinced that this partnership of Huawei and Temenos will be very beneficial for many banks in the ASEAN region, especially. So please keep in mind, we are very convinced about this complete change of business model on the banking side, driven by the open banking approach. We think we have the right architecture and the right vision in place to cope with this change. And we think with Huawei, we have the right partnership in place to be successful together in the markets in Asia. Thank you very much for your attention.
Okay, thanks, Martin. So last but not least, let's welcome another guest from Xinchong, Mr. Li Jing. Mr. Li has a rich experience studying and working in overseas China for many years, and especially when he returned to China, he led the team to build the purely distributed architecture for the first digital banking in this industry in China, which is WeBank. It's quite famous. So in his career, he has been fully participate in the new digital banking development. Now, Li Jing, as the General Manager of Strategic Product Innovation Group in Xinchong, he led the R&D team, working very close with Huawei. Actually, we developed the ThinQ joint solution in last year. So let's welcome Li Jing to introduce his idea for his MODA architecture, which stands for Microservices Oriented Distributed Architecture. Let's welcome Li Jing.
Hi everyone, I'm Jing from France. Today we are here to talk about how ThinQ can bring your banks from core banking systems to an open banking platform. In 2019, we first introduced this vision of a digital society to the world through Huawei Global Financial Summit. We believe that in the future, the silos between all the industry, all the life scenario will be broken down. Data flow freely across all the activities. The whole society will be a lot more collaborative and smart. And all of this will be achieved with a good digital platform and then digital asset and then digital ID. That's the 3D we are talking about for the digital society in the future. And we have seen this process being sped up a lot due to the social distancing practiced in COVID-19 situation. How can we be ready for this challenge? There are three pillars to embrace the challenges posed to us in the digital society. The first one is the foundation. You need a good foundation that can be scalable according to your business size, reliable enough to provide the services continually, and then finally it has to be affordable. And on top of that, you can build all the open ecosystems so that more and more other participants can participate in your business activities with the lowest and the easiest experience. And finally, you need to enhance your capabilities with new technologies such as blockchain, big data analysis, and AI. So today we will focus on the foundation because that's the beginning of everything. So what is the right foundation for the digital society? The right foundation of a digital platform should be scalable in terms of both capacity and the performance. It should be scaled according to your business needs. And it should be reliable because in the future, people would like to have your service 24/7. The availability of your service should be more than 99.99% and above. It should be agile so that you can roll out new services to satisfy the needs of your customers as fast as possible. It should be interoperable. You shouldn't log into any technology so that you can always enjoy the flexibility. And then it should be manageable, easy to maintain. The technical challenge shouldn't be that high to operate such a platform. And then finally, it should be affordable. It should be cheap enough so that everyone can enjoy it. In order to achieve all these targets, Forms comes up with this design called MODA, Microservice-Oriented Distributed Architecture. What exactly is MODA? MODA stands for Scalability, Reliability, and Agility. MO means microservice-oriented. The whole architecture is built based on microservice. The scope of each service is defined to do one thing and one thing only, so all the microservices will be the standardized modules, just like the Lego bricks. Can be easily put together according to different blueprints to make up different objects. In comparing to the traditional monolithic design of systems, each system is huge and bulky, and then each of them will have different technical stacks, and then you have to connect them through different technologies. It's very difficult to handle. Microservice offers you the dynamically responsive possibilities to build your business, to provide services to your customers. Distributed architecture is solving another aspect of this challenge. Traditionally, we need high-end hardware, commercial solutions, so that you can have millions of your customers hosted by a set of machines. Only a handful of companies, such as IBM and Oracle, can offer such solutions, and hence they are very expensive. What if we can downsize the workload for each node? That means you have to slice your business into multiple nodes instead of one node at the moment. So that's the whole idea of distributed architecture. My team first built the first distributed architecture for the banks in China, in WeBank. WeBank now becomes the biggest digital bank in the world. Using the same concept, we have the MODA design, which we have microservices deployed into multiple nodes, and each node will handle a fixed set of workload, so that we can run microservices on containers, on virtual machines. We don't have to use expensive hardware to run them together. By doing so, we can support high performance and high availabilities with no limit. As long as you have the infrastructure, we can always deploy a new node to scale out your capacity, to scale out your performance. And then we use the high speed, high performance event mesh to connect all the nodes, to connect all the microservices together. And this design enables you to scale out for the capacity and the scale up for the existing customers, which offers you more control of your architecture, and at the same time, by using all this open technology, can lower your cost significantly. And then finally, different nodes is totally independent of each other, which offers a much better risk containment. Hence, we believe that MODA can be the solution to your right foundation. The latest load test in our customer project shows that by using MODA, we can scale 30 million accounts on Huawei Cloud. And then the load testing scenario is that we run 11 different business scenarios in concurrently. And then the TPS can reach 17,000. And all of this is achieved by using MODA and then run on a public cloud. The MODA will pose 3 key difficulties. First of all, the number of microservices will be significantly higher than the traditional number of systems that you have to handle. And at the same time, instead of one set of systems, you have to deploy multiple sets. So you will have challenges in terms of resource management, in terms of IT governance, and in terms of maintenance of your whole architecture. To solve these difficulties, together with Huawei, we roll out FinQ. FinQ is targeted to offer all the advantage of MODA as an out-of-box product capability, and at the same time offers the EDA with event mesh of microservices to provide the dynamically responsive experience of business capabilities development, and at the same time using DDD, domain-driven design for enterprise architecture modeling, so that you can solve the governance challenge. In detail, FinQ runs on the reliable, high-performance infrastructure provided by Huawei on the Fusion Cube, and then on top of that, we deploy Platform Universe developed by Forms, and then we run all the banking capabilities. We call it Lego Open Banking Solution on top of Platform Universe. We will look at the Platform Universe first. First of all, the core of Platform Universe is the proprietary microservice framework, allowing us to provide the best experience and support for the enterprise who would like to build MODA. And at the same time, we streamline the operation management by providing the dedicated configuration management, automation of standard operation procedure, and then the runtime control over the kernel. Once you deploy all your services, we can monitor the performance and the infrastructure through our APM, collecting the logs, and then use EADM to design all the modeling. And all of these advanced capabilities runs on an open path, which means you can plug and switch the components on the path layer to have the components that you prefer. But Platform Universe by default offers database, load balancers, blockchains, AI, and other capabilities, so that you can have your platform out of box. And then of course we provide some front-end framework to help you to complete your implementation of your business. And then on top of Platform Universe, we offer Lego. Lego stands for Linearity, Enhanced, Governed, and Orchestration. This is our vision for the application architecture in the digital era. But at the moment, we have Lego Banking, Lego Retail, and Lego Healthcare. In detail, this is our offering in Lego Banking. It consists of point of services that allows you to build all your channel apps to connect your services to the customer, and then all the services connect to the platform through the open banking layer. In the open banking layer, we have the gateways that allows the connectivity, and we have the marketplace to form the open ecosystems that allows participants to join in, and then also to authenticate, and then to onboard all the participants. In terms of services capabilities, instead of traditional concept of systems, we organize them into different service scenarios. We call it service orchestration layer. So on these layers, we offer different kind of business capabilities, so that you can choose an exact business scenario that you want to tackle, and then use the respective module to handle it. You don't have to get a full systems. That's the beauty of using microservices. So we have onboarding, e-wallet, e-commerce, credit cards, saving, and loans. And all of this service orchestration shares the common foundation of core modules in which pricing, payment, accounting is handled. At the same time, the information of product, of customer, and account are saved. So we decoupled the services from the traditional concept of application systems, and we organize them into business service scenarios so that the banks can choose their options more wisely. And this is our typical offering of a digital platform for banks. It runs on Huawei public cloud or on-prem solutions like FusionQ, and then we have the PaaS layers to connect to the infrastructure, and then using the PaaS plus layers to build the microservices to monitor the life cycle of the whole business deployment. And then on top of that, we can offer e-wallet, CASA, loan, welfare, investment, and cross-border solutions for the banks who will be interested in embracing the digital society. This solution first announced in 2019 April, and then for the past 1.5 years, with the collaborative effort from both Huawei and Forms, we have introduced this solution to more than 50 banks across the globe, and then more than 20 of them visit Huawei or Forms headquarters in Shenzhen before COVID-19 started. And then we conducted multiple 3 weeks courses for multiple clients in person and or over the net for them to understand how this solution works. And then more than 10 of them have already expressed the interest that they would like to further the collaborations. And then we have already successfully signed the 4 contracts. And then just 2 days ago, the very first project of FinQ went live in Thailand. So we believe that this is the future, and we believe that FinQ can be your solution to all your challenges in the digital society for any size of financial institutions. Thank you.
So, thanks for Li Jing for his amazing presentation for the MODA and FinQ. Actually, we joint developed the FinQ solution from last year, and we announced this joint solution from last year. And in the short period, we received a very good feedback from most of our banking customers. Nowadays, we already have more than 10 important projects in hand and ongoing. So that's why we are in this industry. We're working with such kind of leading ISV, no matter it's coming from China or coming from the overseas China. Our methodology, our mindset is to help our customer to accelerate the new digital core banking system. No matter this new digital core is for new build or reconstruct from the conventional core. That's our job. And we are working very close going forward, close with our ecosystem partners together to accelerate and help our customer to build a successful digital transformation for core banking system. Thank you. Thank you for your time.